Chris Roberts, welcome to the show today.
Michael, Garrett, thanks guys for having me. Appreciate it.
Yeah, it's great to have you on here, and we probably should have done it a little bit before, but gosh, we're all so busy. But I'm really glad that you're here, and we met, I don't know, a couple of years ago now, and I've been watching you from afar. And you've just been crushing it from an early on, and I want to get into how you did that because some people are more deliberate. They grow, slowly, and there's nothing wrong with that. You kind of took the rhino by the horns, right, and kind of just scaled up. Kind of quickly. And so we want to understand how you did that. But what I'm more interested in right now is to understand why did you even get involved in real estate? Because, you've done some entrepreneurial stuff. You have a business or two and did reasonably well, right? And like, why, what were you doing before? And then what precipitated you, looking at real estate? Like, what was that for you? And why did you start looking at real estate at the time?
Well, thank you for the question, Michael. And I think everyone has to have, they call it a why or something that inspires them or whatever it may be. For me, it was a little bit different. I was early on in my career, I was motivated by money because I grew up really with nothing. I kind of had a struggling mom and dad. They were never married and just didn't really have the guidance, didn't really understand money. My mom always told me, if you want something, you got to work for it. But it's like, well, how do you do that? And I'm young and so on and so forth. So at a very young age, I sort of had the entrepreneurial bug planted and kind of had to figure out, well, how do I grow and what's my motivation? Well, my motivation was I just wanted things. I just wanted things like the other kids had, right? I wanted to grow and have some sort of freedom because for me early on, money was that thing that kind of locked us down and limited us, right? My family, the food we ate, everything. And so at a very young age, that was kind of instilled in me. And as I grew and built a sales and marketing company, which started on the ground floor, just being a sales guy, which was great. It built my people skills. I then realized, okay, well, now that I'm in this career and I'm making a little bit of money, I need this money to work for me. And how do I do that? And so I came across several people in my life that said, you need to pay less taxes through your investments and you need to have, you need to figure out how to offset that income that you're making. And so my motivation early on was I just wanted things. And that could have been just being able to go to a fancy restaurant like my friends went to with their parents or, be able to play a sport because we couldn't afford the equipment costs, right? Or whatever it may be. And that was my early motivation. Later on in life, it was more about creating that freedom. And they use that term lightly, but for me, it was mental freedom. It was, how do I put myself in a position to create enough passive cash flow to exit my career or companies, because I own a few different businesses. And not that I wanted to, because I have no visions of retiring. I technically could retire today, but I have no visions of retiring and quitting. I just want to have the freedom to teach people and to help and to volunteer and to not worry about money coming in as a result of my business diving or a company changing, getting acquired and pushing me out the door. So I've had some scares throughout my career and my life that affected me or that could have affected me substantially financially. And the primary focus for me as I became an adult was to eliminate that fear and that chance of it occurring. And that was to go and create the passive cash flow. The best way to do that is multifamily real estate, at least in my opinion. And there's a whole long story behind all of that, but that's the short story.
We make changes in our life a lot of times by traumatic events that have happened. Like, for example, you talked about, something that could have happened that could have wiped you out. Well, it didn't. Okay. It didn't. Sometimes it happens. And it happened to me. And so when you have this massive problem, you're looking for a solution. It's a very urgent, a very important thing. What I find, though, on the other side is that people who are successful, especially people who have corporate jobs or are successful business people, their life ain't so bad. And therefore, the motivation to make a change is actually relatively low because if it doesn't work out, they have a fallback position. Now, you obviously somehow overcame this challenge because I think it's a challenge. I think status quo is a major challenge. I see it all the time. It's such a powerful force that keeps people based in their comfort zone. Now, having said that, it's a very nice, cushy zone, okay? But it doesn't give them to the next level where they want to go, which in this case is having options like you're talking about, having financial freedom, stopping working and starting doing something. They don't have that. But again, at the end of the day, their life ain't so bad. So how are you able to push through that? Because, your life wasn't so bad. But how did you overcome that? I'm going to call it a challenge.
Yeah, well, I'm glad you brought that up because it goes back to when I first met you. And what's funny is I always knew at an early age that I would do what it would take to become, let's just call it successful or effective. I knew that I would put in the work, right? Which is something that's missing in a lot of people. They want to get rich quick. They want freedom, but they're not willing to put in the work. They're not willing to work 2 full-time jobs, 18 hours a day, 7 days a week for 5, 10, 15 years, which is how a lot of these successful people worldwide become successful. It doesn't just happen overnight. They're one-offs, right? And so I knew I had that, but what I was lacking was the direction on how to do it. I had a couple of single families. I started buying a little bit of real estate, 2006, 7, 8, 9, played a little bit, but really wasn't getting anywhere, a couple $100 a month in cash flow. And when I heard you on a podcast, Michael, and then I went to a couple of your events, I signed up for Dealmaker certificate. I got certified in the Dealmaker event, went to the masterminds, went to your 3-day event. And it really just opened my mind as to how I could escalate this process. And I mean, I put myself in a position just 3 short years later to replace the income of the companies that I was running and own, and give me that freedom if I so choose to do that. So how did I make the shift and what forced me to do it? Well, the reality is that no matter who we are or what we own, we are technically owned by somebody. Somebody dictates our livelihood in some way, shape, or form, right? It's not like, for example, you have investors. Well, if you don't have investors, you can't do deals, right? So you have ownership or accountability to those investors. If you have a brick and mortar store, Michael, you talk about the restaurant business. I had a furniture store at one point, right? If customers aren't coming through the door, well, your business could go up or down and you're stuck. You are married to that brick and mortar business, those leases, the P&Ls and everything else, and you can't get away from it, right? As an independent contractor, to a certain extent, you can. But what forced me to make the shift was I had a kind of a scare a while back as an independent sales rep from a corporate manager who we just kind of rubbed each other the wrong way. And there was a little bit of fear instilled in me that perhaps I could lose my contract as a result of this relationship. Now, no matter how many awards I had won, no matter how hard I worked and the time I put in, it didn't matter. That there was someone above me that could literally change my future as a result of a simple decision that they had the control to make. And that scared the hell out of me, to be honest with you. I thought, wait a minute, I'm doing everything right. I'm grinding, I'm hustling, I'm putting the work, I'm winning the awards, I'm doing everything. And you mean to tell me that this person could literally make a decision to take me out of that zone? That's crazy to me. And that created enough fear in me to make me realize that I had to pave my own way. I had to create my own destiny. And the only way to do that was that passive cash flow. When I met you, it all came together because I thought, okay, now this person's giving me that vehicle to do that. And it's through the scaling of multifamily assets, right? So the question was, who do I hire, i.e., let's say mentor program, to put bumpers on me to protect me so I don't make any major mistakes, because I already have the work ethic. And when I put those two together, it was a matter of time before I literally created that financial freedom. And I'm there today. I could retire. I don't want to. I love the business and we're growing like crazy and we're bringing on team members. But that was sort of the fear in me, was someone else could control my destiny and I wanted control of my destiny. And that's why I made the shift.
Yeah. So I think that so many people, they're like, I'm going to play it safe. I'm going to get a job. And I love what you just said, because to me, it's riskier. That's a riskier option because of the reason you just said. Someone can say, hey, you're fired tomorrow, and then you don't have a paycheck coming in, versus, you can rely on your own skill and expertise and drive to really propel yourself forward on your own. And so I don't think everybody looks at it that way. The safe option to me is the riskiest. So I love that you said that. So, so then you got into a place where you're like, listen, this is where I want to go. And what did that discovery period look like for you? Was it just like, oh, there's Michael and click, here it is? Or what did you have to kind of go through to get to where you're at now?
Yeah, well, I think the first thing is, and again, this is a common phrase, but it's like you really have to overcome fear. And I did that at a very early age through a lot of just challenges growing up. So I was never fearful. When we were at our event and Michael was talking about, I want some goals, and I was throwing out goals, he actually said to me, man, those are crazy, audacious goals. I'm like, yeah, but that's how I roll. Like if I don't throw those crazy goals out, well, then I'm never going to get even close, right? Why would I throw goals out I could reach? right? So I kind of had that mindset early on was how do you put the goals way outside of reach so that you just keep grinding and hustling and pushing to get to that point? And I think the shift was when I went there and realized, and it was a 3-day event, particularly when I went and we deep dove into a deal that really got me thinking, okay, wait a minute. I understand these numbers. I understand this process. This is just systems and processes. Now all I need is maybe some team members or some software to help me run this thing. And I can do this. And it was just that realization that I can do this, but I'm going to have to take massive action now. Right. And that's why I eventually signed up with programs and got things rolling, brought on team members. And we quickly got to, within, 3 years or so, got into the eighth deal plus our fund and all the other things we're doing. So the shift was I needed tools that could give me the confidence that could educate me enough to go take the action. I was willing to take the action. I was willing to write a check or put in the hours. I regularly put in 7 days a week, so that's not a problem. But this is a complicated process, and you need tools and mentors alongside to help you grow through that process. I mean, there's a lot of people that sign up for things and they never take the action. So they're there for years and they're not doing anything, right? So it's two important pieces. You've got to take a ton of massive action, and you have to have the tools or mentors around you to keep nudging you along. I hope that answers the question, Gary.
You started several businesses already leading up to this point. And but before I got into multifamily, I'd started a bunch of businesses. Some worked well, some didn't. But what did you discover were some of the differences getting into the multifamily business versus some of the other businesses that you started or that you were operating?
Great question. I would say number one, that was probably a value add coming from my position was a sales and marketing career for 20 years, because that helped me develop incredible people skills. And I say incredible as in when I'm dealing with people, I'm told, yeah, man, you're the kind of guy I could go hang out with. I could, you get this vibe that you're just a people person, right? And I think that's very helpful in this business because it doesn't come natural to a lot of people, right? And so I think the transition was easy for me because I was already a people person. I lived in this space forever, and I love the business planning and performas, because in corporate America you have to run performas and spreadsheets, and you have to analyze your business all the time, especially in sales. You're measured constantly, and oftentimes I was a commission guy, so I only made money on what I sold, and that was helpful. So the transition to multifamily was a matter of overcoming the fear factor of buying, let's say, across the country versus in your own market, opening yourself up to not being an independent person, and actually opening yourself up to bring team members in and or treat them as equals and delegate responsibilities and think of it as a team and as we and not you. That was a transition point for me. But the fundamentals were the same. It wasn't that big a deal, the fundamentals. I think it was just getting very aggressive and then making sure that I identified my strengths early on and filled the puzzle pieces in around me on things I either didn't want to do or things maybe that I wasn't as efficient at as someone else would. And that boded well for me because that mindset brought me to bring in another mentor student that I met in the program. And he became a partner who's critical in our success today. He does all the back end, all the systems and analytics. And then we started growing exponentially from there. So.
Okay, let's talk about that, because you did grow exponentially from there. Let's talk about maybe how you did that, right? It all starts with the first deal. Maybe talk about the first deal and
Sure.
your partner, how you met your partner and why did you partner with them? You talked about your strengths and maybe talk about what those were and what Paul's are, and why that partnership worked so well and why it was so critical in allowing you to scale.
Love it. This is my favorite thing to talk about because while I'm kind of the face of the company and I'm on a lot of interviews and things like that, I couldn't do this without my team. I mean, I couldn't grow as fast as we are without my team. And the reason that dynamic works is everyone has different skill sets, and this is a complicated space. If you want to grow fast, you need other people to handle responsibilities. It could be property managers, attorneys, so on and so forth. But even on your internal structure, be it your CRMs, your customer service management, be it investor relations, or even asset management, until you grow to a scale where you can outsource, say, asset management to an employee, you got to do it all on your own. And if you don't identify that quickly and find maybe people that like to do that and partner with them, you're going to have to figure it all out. And I can tell you, Michael, from my experience on a first deal, I had about 400 hours, minimum 400 hours in my first deal of my own time. It took 11 months to close it. And now it's very manageable, but it was significant. And I started to bring Paul in about halfway through that deal. But I don't know how future deals, I would have done it without everybody else taking on some of that responsibility.
So how did you guys split up roles? And then how did having Paul in the picture help you scale?
Having Paul in the picture helped me scale because he said right out of the gate, this was actually his exact words. You don't know what I'm capable of, but I'm looking forward to proving it to you. And when I met him and I said, man, that's the kind of guy I want to partner with. Right. And he said, I specialize in, numbers, analytics. I love the back end stuff, systems, processes. I love solving problems. And I thought, oh, I like doing that stuff too, but that's not my specialty. My specialty is people. I like being in front of people, investor relations. I'm the 30,000 foot view guy. I can do everything front to back. I can do deals. I've done flips and fix and all this stuff, but that's not my specialty. I don't want to swing hammers. I don't want to do spreadsheets. And identifying that early is what helped us to grow because Paul deals with, let's say, those things. I deal with the investor relations. And then we bring on a fund manager who does our debt now. So she's debt and fund management, which is great. We brought in an underwriter. So instead of us doing 10, 20, 30 deals a week, right? Now we have an underwriter who focuses on that. It goes to Paul. Then it goes to me for final approval, right? So it's this process as you grow. But Paul and I early on were doing literally everything, including asset management. I hope that answers the question.
Yeah, I think that's, divvying up the responsibilities and understanding that. I love how you're able to kind of differentiate that right away out the gate. How did your guys' roles change as you guys grew?
Well, the way the roles changed is not so much changed because Paul and I stayed pretty focused when we started on what we were good at. What changed is how dynamic we got in our responsibilities. For example, when we started, we found that there was a lot of issues with PPM signings. I'm passively invested in 3,000 doors nationwide. So I had a lot of PPMs coming in from other syndicators. And I found there was a lot of issues with the PPMs. They were very cumbersome and messy. So I said to Paul, how do we fix this? And he started building out systems to make it much, much better, much cleaner, much more efficient. He took everybody's and he said, man, I'm going to take the best of the best and make this better. So his role got more dynamic, right? In the systems and processes side. My role got more dynamic in the investor relations side. For example, I said, well, I can only raise so much money organically, right? We have to start networking with CPAs, doctors, so on and so forth. So we started doing that and it started bringing in a lot more money. We realized we need a fund because it's really stressful raising in 30, 60, 90 days. You need a fund so you have some money there and you can bring in the accrediteds, right? So our roles got more dynamic as we learned more. And then we started adding more people to do some of the things that either we didn't want to do or we weren't as good at, or that we thought would be more efficient if we outsourced them to an admin or an underwriter and so on and so forth. So we brought in a few partners. We brought in some other members that are doing things and VAs and such, but that's the gist of it.
So the thing is that we don't talk a lot about it is the operations and you would call it the back office, right? And I remember from the house flipping days, and this is, I think I would agree with this, is that you kind of make your money when you buy the house, right? Now with apartments though, I don't think that's the case, because if you don't execute on your business plan, you don't make any money at all because there's no value add, right? And so the operations part of it is super important. And so, and a lot of people, don't love doing both parts of it, right? And you just highlighted that. Therefore, what I love about this is that you're bringing on partners and early on, the other thing is you don't have the income to hire an operations person, right? They're paid six figures. So you don't have six figures coming in to pay an operations person. And so in the beginning, the only currency you have is equity. And that's how we all get started. And I love how you're focusing on kind of what your core strengths are and what you love to do. And then Paul, the stuff, he's probably not as much of a people person as you are, right? So being on the phone all day would probably exhaust him, right? And so he's like, thank God there's Chris doing that kind of things, Now, as you get bigger, you start dealing with additional challenges. And we talked about some of them, but like, what are you guys doing in particular, especially when you create a fund? you need to order to grow the business, you need regular deal flow and you need more money coming in. How are you addressing both of those parts of the challenges of the business?
A couple of things. One, our philosophy in the business is, we don't exist without our clients and our partners. Like, we don't exist. We feel like we're one with everybody, and we treat everyone that way. So what we started early on, and how we stem some of these issues that come up is, when an investor needs to call me, they can get me on my cell phone anytime. When a partner needs to call me, they can get me at 4:00 in the morning, Pacific time, because a lot of my guys are on the East Coast, or 10 o'clock, 11 o'clock at night. And I know that's insane, because a lot of people are like, how do you do it? Got to have time for yourself. You got to do that. That's not how I built my businesses. I always built my businesses on putting everyone else first. And as a result, I found that brokers want to do business with us. I found that investors want to invest with us. They want to send their mothers and their fathers and whoever else to invest with us, because they feel like we are the kind of people that they would hang out with. And that means a lot in this business, believe it or not. And I found that was unique, actually, in this business. There's a lot of really good syndicators, don't get me wrong, but it just wasn't very personal, right? And so we make it very personal. And so that has helped us to organically grow, and not just our investor base, but our business. For example, just a tip, for example, I was told you got to build a relationship with brokers to get deals. And I thought, well, how do you do that? Well, you call and you start talking to us. Like, yeah, but they see through that. They know I'm new. This is years ago, right? They know I'm new. So how do I build credibility? Well, I flew across the country just to have dinner with some good brokers, top brokers, and no big firm, and took them out to dinner. It was $500 dinner, right? They offered to pay. I said, no, I'll pay, right? And when I left and I got home, I sent gift baskets to them, right? And I just said, hey, thank you for your time. I appreciate it. It was great to meet you. If anything ever comes up, just let me know. So we try to exude that, hey, you're going to love doing business with us, right? And then we try to make it easy. We're selling assets. I said to the broker, I want it to be easy to do business with us. We're not going to nickel and dime the buyers. Let's just do some business and have it be fun and enjoyable. And I think that has worked well. And that could come from the experience in my sales and marketing career, just being a people person. But we don't want friction. We create frictionless processes. So those two things have really helped us on the team side and the investor side.
Yeah, I actually resonate with that a ton, Chris. I think that what you're talking about right now is one of the number one ways that we actually differentiate ourselves in the marketplace in general. And right now we're in the middle of a transaction where we're selling a deal, and the buyers are a huge pain in the butt. And I'm like, who wants to deal with that?
Totally.
It causes friction for the brokers. It causes friction for both parties. It's stressful. So, on our side, it's always been my goal to make it as painless, as easy. I want people to, at the end of the transaction, be like, wow, I can't believe how easy these guys were to work with. We're thorough. We're not missing things. But that's just one area. And imagine like what you're talking about. You can do that in multiple areas of the business. The investing side, it's a streamlined process through a software to get into our deals. I love that that's been a focus of yours. So when you're doing these things, what are some of your other big realizations that you found, going deeper into maybe some of the different areas of the business where you've implemented this and gotten great results?
Sure. Where I found probably the biggest sort of epiphany we had, which helped us, was we slowed down a little bit, Paul and I, and we said, okay, we're building some relationships with brokers. We're getting deal flow. We're getting true off-market deals. And we all know that it's hard to find true off-market deals. They say it, but it's their top 10 or whatever, this kind of thing. But we've actually transacted true off-market deals, which has been great, right? But then we found, okay, wait a minute, we've got to be able to raise capital quickly. And obviously having a thought leadership platform, Michael, I know you have an amazing program. When you have that, it helps, but it still takes time. It's not an overnight thing, right? And so we took about 4 months and we just focused on building out our thought leadership and really focused on building the investor base. Knowing that we might lose a few people in the meantime, because once you gain momentum, you've got to kind of keep it rolling, right? Because then you have investors sitting there waiting to come into a deal and they might bounce. But we did it because we knew it would be critical for us to be able to actually execute on our raises. And then we also utilize the whole team. Everybody's a capital raiser. It's not that it's just the capital raiser guy or whatever on your team. Everyone has to put in the work and hustle. And we've had some creative ideas come out of that process. Even folks that maybe thought, well, I don't know if I can raise a lot. Well, here, let me coach you through it. Let me tell you about my thought process and how I go through it. And if you don't mind, I'd like to touch on something real quick as it relates to capital raising. What's interesting is I actually get a lot of phone calls. I don't have a mentor program. But I help a lot of people, right? I get a lot of phone calls from people that have been in programs that I've been in or whatever. And they'll ask questions. They're kind of jammed up because they know that I'm willing to give the time. And I'll ask them where they're focused. And oftentimes they've been underwriting deals for like a year, right? Or they've been building relationships with contractors for 2 years, or you name it. And I'm like, well, how much money can you raise? Oh, well, I don't know. I think maybe a couple. Well, have you raised anything on any deal? Well, no. I'm like, well, wait a minute. You're focusing on underwriting and contractors and brokers, and you can't even raise a couple $100,000 and you're trying to do this on your own, right? And so what I found is really interesting is that folks, even when they sign up for things that will assist them in executing this plan, they don't know what they don't know. They don't identify their value proposition, and they don't have enough direction that fits their needs specifically. In other words, you could tell people, here's how you do this. But if someone isn't identifying their particular strengths and weaknesses and putting them down a lane where they could be successful, they're going to struggle all over the place. And I found that. So I would encourage anyone that's listening to quickly identify that, right? And get down that lane so you can start to build some success. That's
a good point. One size does not fit all, right? And so you can say, well, here's all the 10, 20 steps you have to do, but it doesn't mean that you should do all of them. Right. And I think having some guidance, especially when you're working with a mentor, like you said, someone more experienced who looks at you and goes, Chris, you're a very capable guy, but you're probably not a good time for you to spend time in spreadsheets all day long, and doing, lease audits. And you're like, yeah, that really, that tires me out, And so knowing that, even though recognizing that it's also necessary to do those things, and opens you up to kind of look out and partner with people. And that is just magical because now, 1 + 1 is far greater than 2. And that's the sign of a true partnership. And that's what I love about this business is you can do the thing that you're good at and what you love to do and have someone else do the same thing. And now you get the whole thing done. And so that's what I love about that. Now, I'm curious now, what are you guys struggling with right now as you're looking forward into the new year?
Well, I think it always goes down to, my thought is deal flow and capital. It's like, that's the primary focus of all of our businesses, like deal flow and capital. And so you're trying to time, do I have the right amount of deal flow, whether it be off market deals or on market deals, or do I have enough capital to transact these deals? Of course, you can always bring in other money, but it's expensive, right? So the ultimate goal is for you to do it all on your own inclusively. That's always the challenge. Right now we're growing. I mean, we're growing fast. I think I mentioned when we were talking earlier, we're selling 2 properties and we're closing 4. That's a lot going on at the same time. Well, then all of a sudden you've got capital coming back that you have to deploy in a certain amount of time, right? So that's the part where we're kind of, I guess the flux we're in is we're starting to grow. There's a lot of moving parts now, and we're bringing on new software to help us manage our assets. We're bringing on team management software in addition to ActiveCampaign, all the other stuff that we had already, and obviously team members as well to help us grow. And I think where people have a challenge, or where people are challenged early on, is they think, well, if I partner with a bunch of people or I buy software, well, I can't make any money, right? Or I got to give up my ownership, and I'm not willing to do that. And it's like, but no, what you don't understand is if you invest in your business and in the people around you, everyone will make money. There's plenty of money in this business, right? But you have to do all that.
Yeah. So what's your advice for someone listening, watching this right now, and they want to do what you've done, and maybe more advice around we talk about the first deal a lot because it's super important, but I've noticed there's a difference. Some people who kind of approach this from a more of a side gig and hobby perspective to someone who right from the get-go understands that they're building a multi-million-dollar business. Their mindset is slightly different, and then therefore their actions are different than someone who just was doing this kind of on the side. Now, most people, once they do their first deal, it hits them like a brick going, holy crap, I'm now, all of a sudden, this is a multi-million-dollar business, but they don't quite believe it before then. And some people, they see readily past the first deal Not everyone, but some people see past the first deal. I think you saw past the first deal. I think in your mind, the first deal was a foregone conclusion, and you're already thinking, how do I build this into a really meaningful business? Help the listeners kind of get their mind around that. Hey, I haven't done any multifamily yet, but how does someone basically build a multi-million-dollar business from scratch?
Thank you for the question, Michael. And I would say it's actually pretty simple, but it's mostly getting out of your own way. And I've talked about this a ton with people, is like, in your own way could be, well, I want to do it all on my own because, I want all the money. Or it could be, I'm going to do it all on my own because I don't trust anyone, or whatever, right? You've got these roadblocks. And I think what's interesting, and I guess the piece of advice I would give people is, in my case, for example, I went into it knowing I'll do a multifamily deal. Okay, great. No problem. But then I quickly realized, man, there's a lot of work in this thing. So I've got to identify somebody who can maybe help. And don't be afraid to partner with someone across the country. Don't be afraid to partner with multiple people. Don't be afraid to leap outside your comfort zone and just get some momentum going. Get that one first small deal. Maybe it's 20 units. We said right out of the gate, we're not going to do any units or any deals under 100 units, period. That way I was laser focused on that right out of the gate. And sure enough, we did. First one was 112, then 104, 372, 104. I mean, on and on and on. But we focused on that early. So any piece of advice, the main piece of advice I would give anybody trying to get in this space is, first of all, you got to sign up for some sort of program that gives you guidance. It could be videos, software, tools. The SDA is an amazing tool. Still use it. Mentor programs, just something that will give you not just guidance, but will give you a network, right? Because I met my partner that I attribute our success to today at an event. It was the Dealmaker certification event. And from there, we brought on another mentor student that came along and is doing our underwriting now. So I would say, don't be afraid to go out there and get outside your comfort zone and partner with people. You can do it on your own, but it's a lot harder, and it's going to take you a lot longer for sure.
That's awesome, Chris. Yeah, I definitely relate to that. When I was getting back into the business, my second round, I really had to start a whole new network, and I made a commitment that I was going to go to 2 events a month for that entire year. And I met a ton of great people in that process and ended up partnering with Michael and Drew. So it's definitely a very important part for sure.
One more thing I wanted to add was how relevant it was to find the right partners. For example, everyone aspires to leave their career and create enough passive cash flow to leave and retire. But what I found was a major strength in Paul was he had a goal of 1 year after we partnered of leaving his career. And he actually left 3 to 4 months and became basically financially free and said, look, I'm done. I'm going full time. I'm going to put a lot more time into this. And then shortly thereafter, we brought in another partner that was full time. He's our underwriter, but he does some asset management as well. So the reason I wanted to highlight this is because it's kind of scary to think, well, I'm going to go partner with a bunch of people, but you have to realize that if you're working a full-time job, it's really hard to scale your business. But if you have partners that are full-time, or even one that's full-time, that help you scale so that then you can all leave your careers, it's very helpful. So I just wanted to highlight that. You might find that partner that is either full-time now or is aspiring to be full-time, and maybe one of you makes the decision to burn the boats early, right? That's very helpful.
Chris, how can people get a hold of you?
Yeah, you can find us at sterlingrhinocapital.com. That's our website, and we pretty much everything you need there. We've got YouTube and Facebook and all that, LinkedIn, but finding us on our website is probably the best way.
Well, Chris, thank you so much for your time today. You have a ton of knowledge, and you've done so much in the business in such a short amount of time. We really appreciate it.
Thank you, Garrett. Michael, I appreciate it.